Welcome to the DeFi Standard, and this is Mickey B. Fresh. Today, we got a really interesting video for everyone. We're going to discuss the XRP and Spark price and my opinions, fundamental value. Not TA, because that's not in my wheelhouse, and I know there's been a lot of TA analysts out there have been calling for high XRP prices. Now, I want to bring you back to the fundamental side and the utility aspect of what could drive XRP's price and Spark's price. And then I want to really dive into what is exponential growth and why the pace of accelerated adoption is bound to happen, but we don't see it in front of our own eyes while it's happening. So that's what we're going to get into today. And I got this great article from a Google engineer that explains how the pace of innovation and change happens rapidly now in the 21st century in the year 2020, and by 2030 it'll be 4 times as fast than it is just right now. So let's first dive into the price. So with XRP now hitting over $1, we're barely having minimal utility. Yes, there is some utility. There is web monetization payments. There's some trading going on the XRP ledger. There is some ODL use of XRP in RippleNet and ODL payments in Southeast Asia. Now, this is very minimal, and now we're only at $1. But let's look at some of those other assets like BNB and Ethereum, which have had a little more utility due to some of their regulatory clarity with Ethereum has had. And with BNB basically being out of the regulatory scope and having the Binance Smart Chain. And I think BNB is a good representative of what Spark can do. And before jumping around here too much, I really do want to focus kind of on Spark and where its potential can go. It is dependent, I think, on XRP in the beginning to an extent. So the higher value that XRP can get to as Flare Network goes live, the higher value I think we see with Spark. And now I am not a financial advisor, and this is not financial advice. This is just my opinion. And I think we could easily see upwards of over $10. But here's where my opinion, I think, differs from a lot of the TA analysis, is that we're just at the very beginning of what's coming. We're at the tip of the iceberg. We haven't seen anywhere near where the potential of something like XRP, the XRP ledger, and the Flare network could take the value of these native assets. So XRP being the native asset of the XRP ledger means it's the liquidity asset for all the issued currencies on it and for all that trading through cross-border of different fiat currencies. Now on Flare, you have Spark as its use case being collateral. That is its number one use case. So instead of like Bitcoin just coming over and Bitcoin just being a store of value after it failed as a payment asset, and now it wants to be pristine collateral, Spark is designed to be pristine collateral. So for all those F assets that are brought over to the Flare network, 2.5 times to 2 times the value needs to be put up in collateral in Spark. This is going to drive the locking up of these assets. It's going to decrease the circulating supply, and it's going to allow the price to rise. So more value in Spark will give it more ability to be used as collateral. Now, the second reason why Spark will have a high value versus other assets is because it comes with yield. So the fact that it comes with yield associated with it. So just holding Spark or using it as collateral, you are able to delegate a FTSO vote at no risk, and you earn yield by doing that at no risk. So you can put up it as collateral and earn the FTSO yield. And also by putting up as collateral, you earn the underlying F assets. The fees that are paid for everyone minting F assets, they pay a small fee. That goes to those who put up the collateral in Spark. So this is going to drive demand for Spark to be used as collateral, but also the demand for everyone's like, well, I could get yield at no risk. I don't need to give it to CeFi. I don't even need to put it in a DeFi protocol. I could just hold it and it gives me yield. Now, F assets are the same thing. So we want to bring more value over, which increases Spark's price. These F assets come over and they have yield attached to them daily. So daily Spark will be airdropped to everyone who brings over their F assets. So that be XRP, Litecoin, XLM, Bitcoin soon, Doge, and possibly ADA with Cardano. So this is going to drive its value. Now, regular Bitcoin, regular XRP, regular Ethereum do not have those things. Neither does BNB. None of these assets have that. Spark is unique in that it comes with yield attached to it. So think of it like a treasury bond, but with high yield. It just comes with that yield all the time, every day, at no risk. And then when you earn that Spark allows you to earn more Spark. So that's where that's built in. This is a new feature. Now, XRP is going to have this new form in FXRP, which now it's going to give it yield. So there's going to be a higher demand of FXRP, which is XRP. They're one-to-one peg. They'll always be the same price, and they're always redeemable at a very small fee. So you could always go back to XRP whenever you want. Now, Flare, unlike the XRP ledger, comes with smart contracts. So this opens up a whole new array of use cases for FXRP, which is as more XRP is brought over, it's coming off the secondary markets. So this is less XRP on the secondary markets to trade, more value brought over, used in these DeFi protocols and other use cases. There's going to be use cases we can't even imagine. So yes, liquidity and cross-border payments is one use case, but it's not the only use case, and it's by far going to be beyond just one use case. So utility is huge, but it's the demand from the utility that drives the price. Now, we have yet to see how the charts and everything reacts when there's now this new constant brought in. There's this constant demand from utility. You need this asset now, keeps getting pulled off the secondary exchanges and being brought onto Flare network. Now, once it's on Flare, FXRP or Spark, they could trade between each other on FlareX, on a DEX, an automated market maker, in a liquidity pool. It doesn't ever need to go back to the exchange to trade, but it comes off the secondary markets. That's where the pricing is, though, on those exchanges. But they could trade on the actual network itself, in the dApps that are built. And that's one thing that's going to be powerful in the future. These exchanges are not going to be the only gateways onto the DeFi protocols and these actual blockchains themselves. There's going to be new products like Trustline, which is going to be an app that has a fiat gateway and will have KYC, AML, and regulatory compliance. So as we get more of these fiat gateways that bypass the exchanges, it brings more of the assets back to the blockchains where they belong and not just trading on the secondary exchanges. So how does that affect the TA? You really don't know. It's impossible to really predict how that's going to affect. But one thing that we do know, it's going to cut supply and it's going to increase demand. So what does that do? Shoot the price up. So whatever the TA analysis might be saying on the possible prices they see, well, I'll take a lot more than that because that's what utility will bring. Whatever those numbers are, 5 to 10 years out, it's going to be much higher. And market cap means nothing because this is not a stock. It's not based on market cap. These are currencies. They're unlimited in how they could value. And now once that value is brought onto the network and used in DeFi protocols, that's where it is. And it's likely to stay there because you're never going to really need to cash out or go back to exchanges. Yes, there'll be reasons, but as more use cases are brought and more utility, there'll be more and more brought onto the network, less on the secondary exchanges, and therefore higher valuations. So hopefully that gives everyone a little broad understanding of what's to come. So it's like, I appreciate all the TA analysis out there, and I think they're doing a phenomenal job, especially in the current environment of the market. But remember, this is not going to last for that much longer. This whole speculation TA thing, the trends will not continue 2 years and 2 years and 2 years, and we'll just keep repeating. No, that's not where we're going. So we have to be prepared and see those changes as they happen. And now that's not a very easy thing to do. So I want to bring your attention over here to the Google Director of Engineering. And this is one of the most brilliant blog posts that I've read to date. I'm going to post it in the description below because we're not going to be able to read it all. It's very long, but I'm going to go through some of the key parts of it that really were like eye-opening for me. So going down here to where he talks about the differences. So now here's where the big difference between biology and ideas is. While human biology evolves so slowly, we don't notice. Ideas, cultures, strategies, technologies evolve so quickly, we can't keep up. Idea evolution is like biological evolution on steroids. In other words, in a moment when many are already feeling overwhelmed by change, things are about to take off even faster. 20 years from now, the rate of change will be 4 times what it is now. Things will keep accelerating from there. And in 40 years, it will be 16 times more on these numbers later. So what does this mean? This means, for example, we all know 2020, we felt like 5 years were packed into one with the historic C-19, the historic social movements, the stimuluses, wildfires, elections, stock market highs, breakthroughs in technologies. Now we could fill in here, crypto going to $2 trillion from $200 billion, huge jump. Now we saw a once in a generation events in nearly every sphere of life. Each of these events rippled throughout society, leading to unpredictable second order effects which upend our long-held beliefs about media, democracy, business, and citizenship, to name a few. Our emotions went from positive to negative extremes as we faced unprecedented opportunities and challenges. We had to fundamentally rethink our lives, relationships, and work. Here's the thing. 2020 isn't a temporary blip before things go back to normal. It's a kickoff to an unprecedented acceleration that few have considered, let alone be prepared for. If time is like a treadmill, 2020 was running. The near future will be an all-out sprint. So how do you keep up? And here's a really good quote. The coming acceleration shock. If somebody describes the world of the mid-21st century to you, and it doesn't sound like science fiction, it is certainly false. We cannot be sure of the specifics. Change itself is the only certainty. So now we're going to get into exponential growth. And I thought this chart was really good because it shows a visual of 4 different stages of where we could be. So while both biology and ideas evolve exponentially, exponential growth is fundamentally different at different stages of the curve. It starts off slowly, but when it hits the knee of the curve, it grows explosively and profoundly. So I would have to say that we're starting to be right in this area here. I think we know, is anything changing? I think we realize something has changed already. So let's adapt this to basically blockchain, DLT, crypto, technology in general, and fintech that's taken over from the legacy world. This just feels like linear growth. Okay, I think we're a little past that, and we're about to hit this, wow, this feels different. And any of those legacy institutions that think they're going to keep things the same, it's not happening. It's coming, and it's a tsunami, and there's no stopping it. So that's why all this talk with CBDCs, 2, 3, 4 years out, it's going to be too late. So they're going to have to adapt. So just keep that in mind when you hear all these institutions talking about CBDCs and want to keep things the same. The technology and innovation will not wait. It will just come, and it will swallow you. We are now living in the second half of the curve, which I think that's about right. We're starting to get to there now. So I want to skip down. This is a really long blog, but there's some good points in here. I just want to point out a few more. So the future will be far more surprising than most people realize. The reason it'll be more surprising, he argues, because few observers have truly internalized the implications of the fact that the rate of change itself is accelerating. In other words, an exponential curve looks like a straight line when examined for only a brief duration. As a result, even sophisticated commentators when considering the future, typically extrapolate the current pace of change over the next 10 years or 100 years to determine their expectations. Let's break this down. We look at a linear and exponential curve from a zoomed out perspective of more time. It's easy to see the difference between the two curves. So here's the linear, long duration, and now there's the short duration. So you can see the differences of how it looks on the short term. So let's go further down here. Now the 10-year rule. My model shows that we are doubling the paradigm shift every decade. Okay, so this is one that really does show. So by 2030, the paradigm shift is going to be 2 times what it is now. And by 2040, things are going to be accelerating at 4 times that. So to put this chart in context, 20 years from now, the rate of change will be 4 times what it is now. Said differently, for someone who is about 40 years old today, when they are 60 in 2040, the rate of paradigm change will be 4 times what it is now. They will experience a year of change by today's standards in 3 months. For someone who is 10 years old today, when they're 60, they'll experience a year of change in 11 days. Wow, that's pretty powerful. We won't experience 100 years of technological advance in the 21st century. We'll witness on the order of 20,000 years of progress. Again, when measured by today's rate of progress, or about 1,000 times greater than what was achieved in the 20th century. So let that sink in for a second. So it just goes through, I'm not going to go through the whole thing here, but I just wanted to give everyone an idea of how things are accelerating in front of you, but it's hard to necessarily see them, but the rate of change is picking up. And this events that took place in 2020 accelerated everything. And we know that in the digital. So this isn't directly talking about crypto or fintech or DLT or anything like that, or digital, but it's overall, it gives an idea of the things that are changing. And we apply this now to crypto. And we see now it's a $2 trillion market. And it was only 200 billion 6 months ago. So the exponential change is going to keep coming. It's not going to go back to the way it was. So myself, like my personal thing is, I don't think we should expect no 2-3 year bear markets. Like that idea of expecting what was is not what's going to happen. The pace of acceleration is going to be exponentially faster moving forward. And the differences in change, in DeFi, and all these things, we should be looking to the forefront, not to the back. And that's why I say utility is one thing we see coming with crypto, and demand. It's coming. How is that going to affect the valuations of these assets? And how is the actual utilization of these networks going to change the values? Because right now, we only have these exchanges up and down. Bitcoin goes up, down, up, down. That's nothing. That's not what we're here for. We're here to see the networks used and to have applications built on top of them so they could be utilized. And then others can build business models around those. And that's where we're getting to. So to use that decentralization and use those DeFi protocols to earn yield and create new types of value. And I think that's where we're going in the future. So we need to look towards that. Yes, keep the TA and all those models, in front of you in the short term, but long term, we got to look past those because this isn't going to be just a speculative market. It's going to have utility and demand. And me personally, I'm not looking to get out fully anything at $10 or $20. I would maybe take some profits. Now, it's not financial advice, but we've not hit the really exponential growth yet. We're not even close, in my opinion. I think we have still a ways to go, which is good, which is more opportunity for you and more opportunity for me. All right, I think we're going to wrap it up on that note there. So, I'm Mickey B. Fresh, and I'm out.